Hello and welcome back to the Gold Newsletter channel here from the Rule Symposium in Boca Raton, Florida. My name is Kai Hoffmann. I'm the @JR Mining guy on Twitter. And together with Brien Lundin, I'm the host of the channel. Really looking forward to this conversation. It is with Rick Van Nieuwenhuyse of Contango Ore, present CEO over there. Rick, it's a great pleasure to have you here on the channel. Thank you so much for supporting SOAR financially as a sponsor, and really looking forward to this conversation.
Yeah, Kai, good to see you again. This is a great conference.
Yeah, we should be drinking champagne actually, quite honestly, because you got something to celebrate.
We do. We had our first gold pour on Monday, which is why I wasn't actually here on Monday. So it was a great day to get to see the first gold come out of the mill and at the Fort Knox mill. So it was a culmination of a lot of work.
Oh, phenomenal! And congratulations on that massive achievement. You know, a lot of companies aspire to it, but never get to it.
Well, it was actually I had 5-minute sort of remarks from a number of people. And one of the things I said is. Not a lot of exploration geologists get to work on a discovery hole, go through the process of feasibility, permitting, construction, and operation, and actually get to hold the bar of gold. So we have, 3 of us got to do that the other day. So it was pretty rewarding. Yeah.
When I made pancakes with my kids, I always make a small little taster. You should have brought one of those. You should have made one of those, like a little taster. You should have brought a little gold bar.
I should have brought a little gold bar. I have to talk to the Kinross folks about making me a little travel
just a
bar.
Little bit. It's great to show off at conferences. Like nobody really sees that, right? What's the dory bar look like? How much gold is it? Silver?
So it's 660 ounces, troy ounces. So it's about 55 pounds. And it's everybody knows gold's heavy, but everybody underestimates how something looks like a loaf of bread, basically, upside down loaf of bread. They always underestimate, and people get it in their hands, and they're always.
I've held those before, and I was like, "Shit, I go to the gym." It's like, what's happening?
I'm a tough guy. I should be able to hold this.
I don't feel too bad. This is horrible. I feel terrible holding it. So no, it's fantastic, but a massive milestone, of course, achieved. Maybe we just recap a little bit. How did you get to this point, and then we'll talk future. What the future holds for Manh Choh.
Yeah. So Contango discovered a million ounces of gold on land owned by the Tetlin tribe. It was the first time that anybody had actually done any kind of exploration on their lands. They have title to, it's about 680,000 acres. So it's about the size of Rhode Island. So it's a big area. It's been private land for since the 70s. And they'd never invited anybody in to explore. So we found a deposit. And rather than going down the path of trying to build your own mill and tailings facility and all that, we elected to go a different route and partnered with Kinross to take advantage of their underutilized mill there at Fort Knox. And we signed that agreement in 2020, September 2020, completed a feasibility study on the concept of mining the ore there, putting it in the truck, transporting it up to the Fort Knox mill and processing it through the Fort Knox mill. Now there were a number of modifications that had to be made, basically to accommodate the much higher grades that we have at Manh Choh compared to Fort Knox. Fort Knox is a big low grade. It's a mill, and there's also a heap leach section, but the mill grade is in the 0.7, 0.8 gram per ton range, whereas our grade is 8 grams, so it's 10 times the grade. So you need all the reagents. It's all the same process technology. The flow sheet's the same. It's just you need 10 times more reagents to extract and produce gold, and you need a bigger furnace because you're pouring more gold in a set period of time. So all those things have been what have happened, modifications that happened at Fort Knox in the last year. But in the meantime, we'd been mining and transporting ore and building the stockpile up there. And when you drive up to Fort Knox, they have the big heap leach and the big open pit in the mill there, and on the side there's about a 250,000 ton pile of orange rock, and that's Manh Choh ore. It's the oxidized portion of the ore. So,
how does sequencing? What does sequencing look like? How does that work? Because you said you different ore types. You probably have to stop the mill, clean it, and then sort of run your material through it. What does that look like?
Yeah, it's a day transition between stopping. You've got Fort Knox ore on the stockpile, and it's kind of a gray-white color. And so they run that through the mill and empty the stockpile, and then pile up the 250,000 tons roughly of Manh Choh ore, which is like I say, bright orange, very different looking. But the process flow sheet is identical, so it's crush grind. There's no flotation; it's just crush grind, carbon and pulp, and then goes into electrowinning, and then goes into the furnace to pour the gold. We produce a doré bar, so it's kind of it's got a little bit of copper in it. It's got a lot of silver in it, so it's not like bright gold.
No.
It's definitely got the other metals in there. That then goes to the refinery in Salt Lake, the Asahi refinery in Salt Lake, and they pour the 4/9 gold there, and that gets sold on the market.
No, fantastic. Like, how long does it take to process your ore?
Well, from the start to when you put the ore in the front, and you get a gold bar out the side, is 3 days.
Okay. And
so
what recoveries, like what's the sort of the, once you get out of it?
Don't have any of that data yet.
Okay.
So they're going to, and you don't want to do it on a daily basis.
Yeah.
So I don't know when we're going to actually have audited, because we can't release it until they're audited. So that's probably going to be on the next cycle of reporting. But we'll have a pretty good idea of what the recoveries was for the batch. So it's called batch processing. So basically for 1 month a quarter, we run Manh Choh ore, and then for 2 months of that quarter, they run the Fort Knox
Gotcha.
ore.
Okay.
So that's we have 4 in a normal year. We have 4 pours a year. We'll get at least 2 this year, and maybe 3. Just the last one maybe in December, maybe in January. So
what does that always look like in terms of size? Like what can we expect? Like I know is guidance already a thing we can talk about?
Yeah, I mean in a general sense, we'll have more specific guidance as the year moves on. I'd say it's not really it's not a typical ramp up of a normal
ramp
mill.
Up was my next question. Yeah.
Yeah. So because the mill's been operating for 30 years, but this is the first time they've run the Manh Choh ore through there. So, the plan was to we have a full batch, which is roughly 250,000 tons of ore on the pad. If everything is going according to plan, they'll run the whole batch. If there are issues with too much reagent use, they'll do the tweaking and dial it in. If there's something more fundamental, they might say, okay, let's stop, fix whatever's not working the way it ought to, and then pick it back up. Okay. Obviously, they've got a schedule for Fort Knox as well, so that's that sort of ramp up period. Yeah. I think once we get through the first year, or the next 6 months, I mean this first year of operation, say between now and end of December, we'll have a much more dialed in mine plan and processing plan. Okay. But the concept is 4 batches a year. Roughly running 250,000 tons, so roughly a million tons a year, and it's about the average grade is in the 0.2 ounces per ton range. We report everything in grams per ton, and Fort Knox does everything with short tons and ounces. So
American,
it's American.
No, fantastic. So that was sort of ramp up on the mill side. Like, how does it look out project wise? It's like easy peasy, just
pretty much going according to plan. We don't have exact costs, but we're under budget in terms of the mining. It's all contracted, so our contract miner is Kiewit. So we can sort of from a budgetary standpoint, we say, okay, here's the budget, and we're under budget. So that means our costs are in line for mining, and then the transportation is a contract through Black Gold Trucking, a local Alaska contractor, one of the larger ones.
How far do you have to truck? It's not far.
It's 200. No, it's 240 miles.
Oh, okay. So then ore sorting is actually a fitting question. Like, are you doing any of that, and would that apply?
We looked at it, and our ore is not a good ore for ore sorting.
But you got the high grade, so
it's good grade,
okay.
and ore sorting is one of the things that oftentimes it works, but it's not necessarily economic to make it work. And particularly in the Arctic, winter conditions, you have ideal lab conditions, if you will, where you say, okay, you've got a white rock and a black rock, and that's great. But out in the real world, dust and rock and silt and crap gets everywhere, and all the rocks are gray.
Especially at night.
Well, and then it's just another thing to do. It's another piece of equipment to break down. It's another piece of equipment to monitor, and obviously there's capital and operating costs. So ore sorting I think it's really good technology, and I think in some specific cases it'll be very applicable. We're going to look at it at Lucky Shot. It's a very high grade ore. And you have to make sure you're not throwing away your high grade, right? So, if it's 90%, 95% efficient, that's pretty good efficiency, but you're still losing 5% of your high grade. So you gotta do the testing, and I think there's definitely a role for it. We'll probably take a look at it for Johnson Tract as well. because you're in any remote location. I think it's something worth looking at.
The less ore you have to move, the better. It's just not just ESG, but it's just cost-wise as well.
I mean, in rough numbers, a third of our costs are mining, a third of our costs, and this is for Manh Choh, a third of our costs are mining, a third of our costs are transportation, and a third is processing. They're not exactly equal, but those are the big buckets. You've got your operating admin costs that are kind of over that, but they're probably like 10%. So it's really pretty close to 10, 30.
Well, if you can cut down on the 30%, that could be a huge cost saving.
Yep.
Or like on the transportation, for
definitely
example.
Something to look at. We did look at it from Manh Choh. Didn't pencil out. Yeah. And it's a soft ore, and we've looked at it in other projects, and when it's a soft ore, in for that crushing stage, you produce a lot of fines, which you can't sort, or not effectively, and so just becomes less and less efficient with a soft ore. Harder ores, I think, are more prone to better sorting.
Yeah. Okay. Last question on Manh Choh. When do you get paid?
It's a good question. So I think the first, rough numbers, the first batch will go to working capital. Which means we don't have to, we don't have to borrow money, we don't have to raise equity or anything like that for it. So I think we're set there. I think by the second batch, third batch, we'll if we get 3 batches this year, by the end of the year, I think we'll see that cash flow come back. If we only get 2, then it'll be whenever that third batch is, which is, if it's not December, it'll probably be January.
I thought I saw in the presentation you're forecasting or scheduling about $50 million in free cash flow per year from Manh Choh. What does it look like roughly for this year? Like when you talk about 3 batches, like just curious if you can give us a number. I know it's like you haven't put out guidance or anything. So
sure. So and just the feasibility number is the 50. That was for 1920 gold. Well, first of all, we're hedged. Some of the gold banks made us hedge, so we locked in the price of 2025 for 60% of this year's ounces, and then the balance, the 40%, is at spot. So call it 2,300, just to pick a round number. So it's a blended realized gold price of about $2,150. So it's a better than $1,000 margin, which is again good.
Did the cost go up though as well?
We haven't seen, like I said, we're on budget for our mining and our transportation costs. We don't have any costs for processing yet, but we should get them certainly by the end of the year. We'll have them. So I think we got to see what the recoveries are through the processing, see what the reagent use is through the processing, and then we'll get all those costs. But it's a pretty simple ore, especially the oxide. The sulfides, we're getting a little less recovery out of the sulfides like you typically do, but there'll be high 80s.
It's still fantastic for sulfides.
The average for the deposit was, I think, 92%. So
no, high 80s for sulfides is still good.
Yeah.
So without having to burn anything off.
No, there's right. Nothing special going on here, and it is just carbon and pulp. There's not even the flotation step.
Okay. Let's quickly talk Lucky Shot. How does that fit into the portfolio and the business plan right now? You mentioned that you might look at ore sorting there. So what are the plans? What are the options there? Yeah,
so we're all set up for drilling at Lucky Shot. We got set up last year. It was an early winter, so we just decided from a safety standpoint we would want to be stuck on top of a mountain and when the snow's flying. So we pulled out, we got everything set up to drill, but we just didn't get the drilling taken. So we're not going to do it this summer because we want to make sure we get through the ramp up and on the production cycle from Manh Choh, because we want to make sure that cash flow can work both ways, right? And once you're mining and all that, you have to feed the machine. So we want to make sure we're not overextended. I think it's the worst thing a junior company can do is get overextended, and then you can't deliver. You got to deliver in the hedges.
We see equity financings happen at the time.
Oh, exactly. So we're being cautious. On Lucky Shot, we've got everything lined up to do the underground drilling and the surface drilling next year. So I think that's planned. And it doesn't really change the overall plan and schedule for Lucky Shot, whether if we got the surface drilling done this year or not. So once we got, we know we got good, strong cash flows out of Manh Choh.
What is the plan for Lucky Shot? Maybe just to sort of recap, just remind us real quick.
So Lucky Shot, we have the underground infrastructure in place to drill the vein out from the underground. These will be short holes then. You're drilling 50-meter holes, lots of them, probably about 300 holes to outline 400,000 ounces underground. There's more work from the surface to drill the ore chute down down towards the Lucky Shot level. In total there, if we can put together 400,000 ounces, 400,000 or 500,000 ounces between we call it the Coleman segment and the Lucky Shot segment, that we can put a mine plan around. Starting up at 30,000, 40,000 ounces, and then as you get more underground development work in place, you could ramp that up to 50 or 60,000 ounces. Be a simple direct ship ore. Again, we're fully permitted there for mining, so we don't. It's on private land, and we've been mining, right? And technically, we just haven't been processing. Again, put the ore in a box. The rail is very close to us. About 20 miles from the railroad. There's actually 3 sidings right there, so we wouldn't even have to build a siding. Load the boxes onto the flat cars and haul them up to Fort Knox and see if we can get a deal done with Fort Knox to process them there. They're open to the concept. We haven't had any
They have enough capacity available?
We get plenty of capacity, yeah. It's a simple ore. In fact, it's Fort Knox is a really simple ore, and people say, it's an oxide deposit. Well, it's not really oxide. It's just, there's no sulfide. It's just quartz and gold. And that's kind of what Lucky Shot is. It's just not a big, it's all concentrated in a single big structure rather than a big disseminated, stockwork. So yeah, simple ore body. Again, we don't have an agreement with Kinross, but they're open to having a discussion. So once we get the resource outline and put a mine plan together, we'll sit down and see if we can work something out. But it just makes sense. There's plenty of capacity there, and
seems like you have a decent relationship.
We've had developed a really good working relationship with Kinross, and that's a lot. It's a huge piece of infrastructure in the state of Alaska to take advantage of. It might, from our perspective,
it makes life so much easier if you don't have to build your own mill infrastructure or anything.
Well, it's the biggest challenge for any junior company is that Lassonde curve is getting from one side of the valley to the other side of the valley.
If you can shorten that, it almost looks like a sinus curve instead of just drawn out, whatever it is.
And effectively, that was what we were able to do with Manh Choh is get from the discovery, outline 1 million ounces, leapfrog over the valley of death to production by not building your own mill. If we'd built our own mill at Manh Choh, first of all, it would have cost $600-700 million, or would have cost $6 and then would have spent $7, right? And the market would have penalized you for that. It would have taken, I don't know how long to permit a tailings facility. I mean, that's at least a 5-year process. And, obviously way more controversial. So yeah, taking advantage of all the existing infrastructure just makes a lot of sense. And that is fundamentally our business plan.
Well, we got to talk about the last big topic. We got to talk about your last acquisition here, the High Gold, and how sort of that fits in the Johnson Tract project that you bought recently. Were you just opportunistic? Like, what's the plan? How does it fit into the 5-year business plan? Yeah, so
it fits in because it has the same criteria that we see at Manh Choh of an ore body, high grade, on existing infrastructure or near existing infrastructure. In the case of Manh Choh, it's the highway. In the case of Lucky Shot, it's the highway and the road.
Johnson Tract is water.
And Johnson Tract, it's the water. Yeah. It's the ocean's right there. We're 10 miles from the ocean. So, barging shipping is by far the cheapest form of transportation. Where does it go? We don't have an answer yet. It's a high quality deposit. The other characteristics that we look for in focusing on our direct ship DSO, direct ship opportunities, is it's got to be a simple ore body from a mining standpoint, and especially from a permitting standpoint. So what are those characteristics? Well, grade is obviously king, as usual, but it's also, is the ore body above or below the water table? Makes a big difference from a permitting standpoint. Lucky Shot, above the water table. Johnson Tract, above the water table. Doesn't mean you don't have any water, but you don't have a lot of water. An infinite amount of water to move out of the way, and once you've touched the water in the mine, it's your water. You got to clean it up.
Once you start dewatering,
no matter how dirty it was when you got it, you got to clean it up better than it was. So those are all characteristics, as well as how good of an ore body is it. In the case of Johnson Tract, it's good grade. It's above the water. The known resource is above the water. We think it'll extend down below, but you're not going to start down there. You're going to start with stuff that's above you. Just let the gravity do the work. And then it's 40 meters wide. That's as wide as this room.
Yeah. It's a nice size ore body.
Yeah. And it's vertical or near vertical. I mean, so those are, that's a nice, sweet ore body to be able to mine and to be able to direct ship somewhere else for processing. It's a good enough grade. And just rough numbers, Manh Choh is 8 grams per ton, and it costs a little over a gram to haul it up the highway. 1.2 grams, 1.3 grams.
Enough margin.
You got plenty of margin left. And if your mining is cheap because you got a 40-meter wide underground stope, you can do pretty cheap underground mining for that. So,
what does the work program look like this year at Johnson?
This year, we're we're doing about 3,000 meter drill program, and the ore body is it's pretty well defined. But to do a feasibility study on it, you need to get underground. When you underground mine something, you have to get underground and really understand what the underground looks like. So we're doing all the drilling this year basically to get all the information we need to get the permit to go underground. We're permitting the access road over between the camp and the portal site right now, and it's I think we probably should have the permits there by the end of the year. And then we'll get the drilling done. So it's mostly geotech, hydrology. You're in the ore body, so you're going to hit the ore. I mean, that's the whole idea. But you want to gather all that geotechnical, hydrology information for rock quality, ARD, acid rock drainage, metal leaching, all those characteristics that, from an environmental side, you have to have the answers to how am I going to deal with this from water treatment plant, whatever, however you're going to do that. But that gives us the permit to get underground. We get the permit next year. And then by 2026, we can get underground, do the underground development. Take about a year to get underground, get the underground work done, and get the drilling done. It's roughly the same scale of project as Lucky Shot was in terms of the length of the underground and the amount of development work you have to put in. So we've done this before. It's not like it's an order of magnitude bigger or something like that. It's it's about 1.5 kilometers of underground work. Tunnel to get there. It'll be an incline, so the water drains out. It's in the footwall of the ore body in a post-mineral intrusion, so it's deader than a doornail. So it's a good place to put your underground infrastructure in from an ARD standpoint, metal leaching and all that. But we also, we just need to collect more data to be able to demonstrate to the regulators that's what it is. We'll take them out there this summer as well.
What do you need to take in terms of studies to make a construction decision? Do you really need to take a feasibility study? Is that something the market wants to see, that you need to see? What's the internal process look like? Yeah,
it'll be a simplified feasibility study in the sense of you're not building a mill, you're not building a tailings facility. So that's where the lion's share of the work is. I mean, this is just mining. So
don't need any big engineering studies or anything. Maybe for the underground portion.
You need a mine plan. Yeah. So again, it's hydrology and geotechnical work, and what's the metallurgical characteristics of the ore body? What's the variability of the ore body? Top of it and bottom of it, this side, that side. There's more work to do, but it's pretty classic stuff. The complicated part in a typical mining operation is the process facility, and is the tailings, and certainly that's always the controversial one. Tailings failures doesn't matter where around the world they take place; they affect the entire industry, and it's definitely something that is part of our plan is not to build those things. No. Take advantage of the ones that are already there, they're already permitted, they have extra capacity. It's a lot easier to put a lift on an existing tailings facility, to permit a lift on an existing tailings facility than to permit a brand new one.
Exactly. So maybe to sum up the conversation, Rick, run us a bit through the business plan. What does a 5-year plan look like? I know you mentioned that in your latest press release, but maybe as a summary question, what does that look like, and what does Contango look like in 5 years?
Yeah, so we're basically want to wash, rinse, repeat with what we've done with Manh Choh. It's has the quality of deposits that we like, good grade, close to infrastructure, and it has that ability to be a DSO, direct ship ore model. All three of our advanced assets, Manh Choh, Lucky Shot, and Johnson Tract, fit that model. A 5-year plan is basically to get each one of those sequenced. Starting with Lucky Shot. So Manh Choh's nearly there. I mean, we've poured our first bar of gold. So between now and the end of the year, we'll know. Okay, it's on track. Here's our 5-year mine plan for Manh Choh. Lucky Shot do the drilling, get underground, get the resource developed, put a mine plan together in the next 2 to 3 years. And essentially the same thing for Johnson Tract. We're about a year behind at Johnson Tract because we need to get the permitting to get underground there. We'll get that done next year. We'll collect the information this year, get the application in next year. 2026, we can get the underground developed. Do the same thing, do the resource infill drilling, the metallurgy, etc. And in an additional 2 to 3 years, so 5 to 6 years, we've got we've got Manh Choh operating, we've got Lucky Shot operating, and we got to find a place to process the Johnson Tract ore. It's a polymetallic, so you've got it's gold, silver, copper, lead, zinc. So you'll have to find a home to process that kind of an ore. And there's certainly lots of facilities out there. It's good enough grade that you could ship it. You could actually do a direct ship to a smelter. So those are all things that we'll be taking a look at over the next couple of years for Johnson Tract. I think Lucky Shot's, it's a really simple ore body. So process-wise, it's pretty simple.
Oh, fantastic! Right, super exciting. Like, what's the next press release going to be?
Let's see. I guess the drilling and drilling results and getting underway at Johnson Tract, and then once we have costs for the batches at Manh Choh, we'll put out our guidance and what our all-in sustaining costs are. The feasibility study had them at $11.16 an ounce. I think we're on track mining and transportation wise. That final step of
final
processing,
30% still missing there.
We'll get that there, that last 30%, and I think things are looking good. It's
fantastic.
We continue to have a good gold market. I think the equities are still not really reflecting the cash flows that I think a lot of mining companies are going to be achieving. And so I guess broad picture, if the major companies can demonstrate that at $2,300 gold they're making a lot of money, I think eventually that valuation to cash flow will be realized, which I don't think we're seeing right now. It's not reflected in the market.
Yeah, let's see what the Q2 numbers for the majors look like.
Yeah,
and
exactly.
then if they wake up some of the generalists here that we desperately need in the sector. Rick, it was a great pleasure catching up with you. Really appreciate the support, and can't wait to chat and catch up again soon.
Well, sounds good. We'll look forward to giving you an update on when we have another batch or two run through.
There you go. Make sure you produce a taster.
I'll try to bring a bar next time. I'll work on that.
Fantastic. Awesome. Thank you so much. And to everybody else, thank you so much for tuning in here to the Gold Newsletter. Hope you enjoyed the conversation here with Rick Van Nieuwenhuyse. He's President and CEO over at Contango Ore. What do you think of the company, or how do you think the company's doing? Let us know in the comments below. If you haven't done so, hit that like button, hit that subscribe button. It helps us out tremendously, bringing companies like Rick's on and have those discussions, see where they're at, what they're doing, and what are the next steps. So thank you so much for tuning in, and we'll be back with lots more here from the World Symposium in Boca Raton, Florida.